5 seconds. Speaking at the seminar on tax reforms in India, the finance minister said taxation is an instrument of social and economic engineering. Tax collections help the government to provide education, healthcare, housing, and other basic facilities to the people to improve their quality of life and to address the problems of poverty, unemployment, and slow development. To achieve these objectives, it has been our endeavor in the last 1 year to foster a stable taxation policy and tax administration. A very important dimension to our tax administration is the fight against the black money. A number of measures have already been taken in this direction. I propose to do much more. We need to revive growth and investment to ensure that more jobs are created for our youth and benefits of development reach millions of our poor. In order to achieve all these, we need an enabling tax policy for our country. I have already introduced the bill to amend the Constitution of India for goods and services tax in the last session of Parliament. This tax is expected to play an important role in the way of our economic functions. It will add enthusiasm to our economy by developing a common Indian market and reducing the cascading effect on the cost of goods and services. The government of India is moving in various fronts to implement goods service tax from the next financial year. We need to match this transformative piece of legislation in indirect taxation with transformative measures in indirect taxation. The basic rate of corporate tax in India is higher than the rates prevalent in the other major Asian economies, thus making our domestic industry uncompetitive. Moreover, the effective collection of corporate tax is also on the higher side. Therefore, the government of India is losing on both fronts. We are considered at having a high corporate tax regime, but we do not get the tax due to excessive exemptions. A regime of exemptions has led to pressure groups, litigation, and loss of revenue. It also gives room for avoidable discretion. The government of India proposes to reduce the rate of corporate tax. This will lead to higher level of investment and more jobs. This process of reduction has to be necessarily accompanied by rationalization and removal of various kinds of tax exemptions and incentives for corporate taxpayers, which account for a large number of tax disputes. I wanted to start the phased reduction of corporate tax rate and phased elimination of exemptions right away, but I thought that it would be appropriate to give advance notice that these changes will start from the next financial year. Our stated policy is to avoid sudden surprises and instability in tax policy. Exemptions to individual taxpayers will, however, continue since they facilitate savings which get transferred to investment and economic growth. The role of indirect taxes is also very important in the context of promotion of domestic manufacturing and make in India. Therefore, I propose to reduce the rates of basic customs duty on certain inputs, raw materials, so as to minimize the impact of duty and reduce the manufacturing cost in several sectors. My next proposal is regarding minimum government and maximum governance with focus on ease of doing business and simplification of tax procedures without compromising on tax revenues. The government of India is of the opinion that the rich and the wealthy must pay more tax than the less affluent ones. Therefore, the government of India has decided to abolish the wealth tax and replace it with an additional surcharge of 2% on the super rich. This will lead to tax simplification and enable the department to focus more on ensuring tax compliance and widening the tax base further to track the wealth held by individuals. The information regarding the assets which are currently required to be furnished in wealth tax return will be captured in the income tax returns. This will ensure that the abolition of wealth tax does not lead to escape of any income from the tax net. The concerns regarding applicability of indirect transfer provisions to dividends paid by foreign companies to their shareholders will be addressed by the Central Board of Direct Taxes through a circular. These changes would provide a hassle free structure to the taxpayers. The Tax Administration Reform Commission has given a number of recommendations to improve the administration in the tax departments. These recommendations are under examination and will be appropriately implemented in due course. With this, I conclude.